All right, hey everybody, I'm Nick Hekalowski, a senior research director here at IANS. Steve Martano is a partner at Artico Search and an IANS faculty member. We wanted to get everyone together today to talk a bit about some of the findings from our 2024 IANS and Artico CISOs compensation and budget survey. We had more than 700 respondents this year, and we know that budget season is coming up fast for you folks. We're working hard to get our budget report out in early September. But knowing that a lot of you are doing your planning now, especially as late summer comes and it's a good time window to start thinking about these things, we wanted to get you as much of this data as we could as early as we can and give you some of the market context and anecdotal advice of what we're seeing based on that data. So it is worth noting that all of these slides will have a preliminary data subject to change tag on it, but this data is very close to final. All that we're really doing at this stage is finalizing it. Things might move by a percentage point. They might move by, there might be like a minor change to one of the charts because we decided to cover something a little bit differently. But effectively, these are final, and we are currently drafting the full report. Steve, can you provide some additional context on kind of what we're trying to achieve on this with this research in general? And tell
Yeah,
people
yeah,
about
happy
yourself a little bit too.
happy to. Yeah, so a number of people on the call that I know through the IANS community. I have been working with IANS very closely, and we've been working in collaboration on this effort going back to 2019, 2020. So this is a multiple year iteration. The reason that we started to do this, for those that don't know, is that there is a lot of misinformation out there from credible sources, but we had CISOs coming to us talking about compensation, talking about budgeting, saying that what we are seeing out there in the market does not match what we're seeing inside the four walls and when we're trying to do budgeting. And so we wanted to go to all of you in the community. This is a grassroots effort. This is 700 to 750 CISOs like yourselves across a variety of different segments and sectors. In addition to being IANS faculty and working on this initiative, I co-lead this cybersecurity practice at Artico Search. We're a retained executive search firm. There's some people on the call that I've known since my time at Russell Reynolds Associates and then at Caldwell Partners. 3 years ago, a few partners from Caldwell and I decided to spin out our own boutique. Our firm works on everything from growth venture, CMOs, CROs. We do a lot of work in AI investing and investor searches for some of the biggest venture capital firms in the world. My group focuses exclusively on cybersecurity leadership, so it's all CISOs and their teams. And I provide consulting engagements through IANS, whether it's benchmarking compensation, benchmarking budget, whether it's marrying a program to a NIST framework. These are all the types of projects that I do in my capacity as faculty member.
Great. So here's how this is going to work. Steve and I are going to walk through slides featuring key charts from our reporting. I'll walk through kind of what we're seeing in the data and what we want to draw your attention to. And then Steve's going to provide market insights and anecdotal advice based on what he is seeing in his work across the whole wide range of organizations and the evolving industry. But we also want this to be conversational as much as we can within this webinar setting. Please use the Q&A box to put in comments, ask questions. We will address as much as we can and really want this to be something that is serving your needs as we work through the data. So with that, let's get into some of the budget trends that we are seeing for 2024. On the whole, we are seeing that budget growth is slower than it has been in the past few years, or I should say in 2021 and 2022, but still the majority of CISOs are experiencing budget growth. Steve, how would you characterize the current state of the market in terms of CISOs fighting for resources?
I think coming out of the pandemic, we saw a major transformation. We saw very large increases in budget. And while we're still seeing increases, they're not to that extent. And I think most people on the call have probably experienced that as well. I do think that what we've heard over the past 12 months, particularly as we head into this budget cycle, we've heard a lot of organizations saying, we're taking headcount from all areas of the business. I've been asked to do a little bit as well. Maybe it's minimal compared to some of the other functions, but the haircuts are still there. We do see the trend lines that budgets are increasing, and writ large, that's still a good thing because there's more regulatory pressure than ever. The threat environment is changing quite significantly. These challenges are getting more complex. But we also want to be mindful of the macro conditions. And I think that this cycle has just reminded us that security is not immune from those macro conditions.
No, and to further that challenge, we don't have this data in this slide, but we see this in our other data that we'll be reporting on later in the year, is scope creep for security continues to increase, and the scope that CISOs are facing is growing at a much faster rate than budgets. Steve, what's your advice for folks who are really feeling that crunch of like we're being asked to do a lot more, but our budgets are only growing incrementally?
I think it's about thinking holistically about the program, about the risk profile for the business and what you're being asked to do. When we think about these creeps in scope and increases in scope, it could be anything from being in charge of IT and infrastructure, being asked to lead a cloud digitalization effort or data migration effort. Identity and access management, which was often outside of the realm of the information security officer, is now more often in the realm. And so what are the project budgets, but also the operational budgets for these? Because transformational work will require initial investment upfront. But then what's the operational cost of that to keep things aligned with where you need to be from a program perspective and a risk management perspective?
Yeah, and that is becoming challenging because we are seeing incremental budget growth becoming more and more the norm. I want to draw your attention to the middle of this chart where we see 26% of CISOs have had a flat budget, 1 to 5% budget growth is common for 30%. So we're really seeing folks really just getting smaller budget increases and dealing with that incremental growth when the scope is changing so much is a core challenge. But it's also a signal that there's been some maturation in the industry and some normalization of what a security budget needs to be. Can you talk about that a bit, Steve?
Yeah, I think that so looking at this chart, so 70% of CISOs are getting 10% or less in increase in budget. And I think part of that is just the trend of stabilization for security. I think while there's still a long way to go for some companies, most companies have a baseline for security, and that initial investment up front is pretty significant. I think we started to see that come into fruition. I think about this in terms of a 10-year, we're 10 years into probably a 30-year transformation. If we go back to 2014 and we think about the Target breach, we think about Anthem, we think about Sony, we think about Snowden, Home Depot, and then Equifax, and it was just on and on and on. I think that this has become a topic that boards are much more aware of now than they were 5 years ago. They're much more engaged in discussions, not asking questions such as, well, we're safe, right? The leading question, which I think a lot of us heard 5 years ago, 6 years ago. But now it's, does our program match our risk profile? What are our priorities, and how are we thinking about security with regards to company valuation, particularly if you're in a private equity or venture capital environment, or how it affects your reputation in the market if you're consumer facing, or whatever the case may be. And on and on and on, we still see these pop up in the news, whether it's Change Healthcare or whatever the latest breach is. These still affect valuations, and it's something that I think more and more senior leaders are aware of. Significantly different than it was 5 years ago, even 3 years ago.
Yeah, we have an interesting question in the chat, Steve, which I think you might be able to speak to more anecdotally. We don't have this data, but are we seeing inflation in vendor pricing over the past few years? And kind of how's that
So
affecting the budget
it's an
conversations?
interesting question, and I would actually ask you all if you're seeing that in your budgets. But from a vendor standpoint, here's what I will say: we are clearly seeing a consolidation of vendors with some of the solutions organizations, the very large scale solution companies that are coming in and they're buying tech, and there even though there hasn't been as much M&A as there was in the past, the really good tech is still being acquired, and so what I think that means is that you have the large behemoths of organizations, be it a Microsoft or a Salesforce or a CrowdStrike or whatever, gobbling up these companies and then starting to do some solution selling. So I'm not sure how much inflation that we've seen now. It looks like from the chat that everybody's raising costs just like they're raising costs everywhere. I'm not sure that changes because now the structures of deals get more complicated and the services get more complex where, okay, well, it's one-stop shop, but there's also a cost to that because where else are you going to go? And so I think that in some respects it may streamline because there are fewer vendors that need to be onboarded, but I also think it gets more complex when you're going to one vendor for 7 different solutions.
Yeah, I know we're hearing from a lot of folks coming out of the recent wave of third-party incidents that we've had over the past few months that the appeal of some of these really big platform-based security solutions, like what Microsoft is doing, where you just kind of say, I'm going to go all in and be on Microsoft, or I'm going to go all in and be on Google, and kind of get my security from that platform. It's becoming so financially attractive at this stage that a lot of orgs are thinking about after these third-party breaches going that way. But as we see, there's a lot of correction and overcorrection as the markets move like this. And it's going to be something that we're talking about a lot in next year's curriculum, and our faculty and CISOs are thinking a lot about is how do we find the right balance between the economic benefits of going with a single vendor platform and the resiliency benefits of having multiple vendors to balance. And those are really complex questions to be thinking about as we're dealing with just incremental budget growth. Question on 3 to 5 increase for staff raises included in the budgets. Staffing is incorporated into this number. We've got some more detailed slides on staffing coming up later, so you'll be able to get some specific data there. And yeah, cloud services providers pushing 30% increase. That is huge. And I don't know, Steve, if any of us would be surprised because we just see it a lot. Like, let's get people into our ecosystem with good pricing, and then we'll raise the prices considerably over time.
Yeah, we see a lot of that, the preferential 1 year, but then what is the shelf life of that? And then how dependent do you become on that provider? I would also add this isn't unique to security either. I think that those of us who are also in charge of IT as well as security would definitely say that this isn't unique. And I think that from a vendor stack, whether it's MarTech or sales enablement tools, it's all gone up significantly more than it had in previous years.
Agreed. So I don't necessarily have a lot that I want to spend time on this slide. I wanted this slide here to be more as a resource for all of you folks. I do want to draw attention to me, this slide reinforces our belief that a lot of the budget pressure is a result of economic realities, not changing priorities to security. The segments that tend to be very most affected by economic conditions are the ones facing the most budget change, the ones that are more stable relative to the economy tend to have less budget change. Steve, anything you want to add there?
I think that that's right, but I also think that just writ large, more and more organizations, particularly those in the private realm, are thinking about valuation and security's impact on that. I'm currently working on two CISO searches for organizations. One's a 1,200 person health tech organization. One is a 6,000 person health tech organization. They're thinking about what that exit looks like, and they're thinking about how security can either enable that exit to go smoothly or can be a real hindrance to both valuation and timing. And so I think that when we consider how much investment is going on in a program, yes, you have the maturation cycle of what does the program look like compared to what it should be for its size, scale, complexity, regulated environments, et cetera. But then also, where is an organization on their time horizon as far as the investment and as far as the backers? Because leaders have clearly seen that they need to get completely past a breach and it has to be a non-issue when they go through due diligence. Otherwise, the valuation and the timing will adversely be affected. And we see that all the time.
Yeah, and we have a question on geographical distinction between Canada versus US. Right now, this is all of our sample put together in one. We will later in the year or early next year pull out some Canada specific data to report on, but right now this is everybody from North America. And then folks are saying they're seeing suppliers come in with 15% price hikes, pushing for three-year options to keep competitive pricing. Steve, can you just unpack a little bit more about, and I'll move on to the next slide as we do this. The financial pressures being pushed in the vendor market are obviously these are huge. We're seeing it in the comments. Can you kind of elaborate a little bit there?
Yeah, and that's some large proportion of the entire security budget or the IT budget, but I also think that staff and compensation represents a very large component of that. So thinking about how do you keep your teams happy, how do you keep attrition low in a normalized market? All of this year, I heard, oh, my attrition in my organization has never been lower. And a lot of that is because people are looking to hunker down where they are during instability in the global market. But also, there may not necessarily be as many opportunities out there for people to actually think about what's next. I think that the days of multiple counteroffers for leaders and people on their teams and high performers, counteroffers, multiple offers, somebody who would say, yeah, I'm involved in 5 different processes and I'm expecting 3 to 4 offers in the next 2 weeks. That right now has stabilized and that doesn't exist anymore. So the market has frozen up a little bit. As that comes back, and I'm not sure it's going to come back to that extent, thinking about the line item of compensation and staffing is a main part of this too. So the vendor piece is one part. That's a huge other piece of it as well.
Agreed. So on the whole, we saw budgets bounce back a little bit this year with average growth going up to 8% from 6% last year. We have inflation related numbers in there for reference for folks who are in very inflation heavy industries. But as we've spoken about, we expect this more incremental growth to be kind of a new normal. Steve, advice for folks as they kind of navigate annualized budget cycles where it's fighting for 5%, fighting for 8%, as opposed to I need to go in and ask for 40% because our security program's changing completely.
Yeah, and I think that there's a danger here of going in and asking for that is sort of showing that you're not listening to the rest of the business and maybe have a lack of understanding on what's going on at the macro conditions. So what I would say to anybody who's going through a budgetary cycle is really listen to what else is happening in the business and piggyback some of your budget items on the impact that they'll have in security. Maybe that's an impact of what somebody else is asking for as well. If there's going to be a major ERP implementation, majority of that's not security, but there's a security implementation. If there's a major marketing technology or sales enablement tool transformation that's happening, yeah, that's majority going to be elsewhere in the budget, but there are security implications of that. So thinking holistically about project prioritization for the business and how that may impact security will just give you, I think, more tools to be able to go and offer up a budget that's considering the priorities of the organization and what we're expecting to do over the next 12 months. This is the impact of security, and we don't want to leave ourselves short anywhere because these are major initiatives that perhaps the board has funded and knows about and is getting reported on, or senior leadership has decided these are our 3 to 4 main initiatives going into 2025.
Yeah, and that alignment to key initiatives is going to be really critical as we do see a lot of variance across industries, and sometimes overcoming that business posture is only possible when you're really aligning to the business and getting kind of out of the infosec-centric mindset. Now, we are seeing sectors like tech and retail bounce back significantly. Steve, can you talk about what you're seeing in those sectors that you might attribute some of that growth to?
Yeah, I mean, look, I think that the tech took a major hit over the last 12 months, and things are starting to bounce back a little bit. If we look at this chart, it looks like 2023 was really the bottom. And we hope that as far as the market, the bottom is behind us as well. Tech is typically one of the earlier movers in adopting some of these technologies, particularly some of the more cutting edge vendors as well. Retail's a little bit different because I think that retail was under a lot of pressure following the Target breach and the Home Depot breach and other consumer breaches that brought this to the forefront of the consumer. But when we think about retail, they're not typically at the cutting edge of security from a programmatic perspective because the budgets simply aren't there. And I think our data shows us that. It's good to see a little bit of a rebound. I guess I'm not shocked that it would be cut so much from 22 to 23 and 22. Everybody was riding high budgets across the board were larger than they had been, and so it's whoa, this if we're as a retailer viewing security as a cost center, which regardless of whether or not that's the right view is not super relevant here. If organizations are thinking of that, then you see, okay, that's one of the first areas where there are cuts when times are getting a little bit more difficult.
Yeah, so some questions in the chat I want to try to get to now. Steve, do you see a correlation in interest rates and budget growth slash contraction?
Oh, definitely. I think that this is all related, and we'll pull on my finance background a little bit here. I think that from a macro standpoint, look, we're at a period of highest interest rates in a long time, instability in this political markets in general. We're in an election cycle, which leads to uncertainty. Uncertainty can be a really damaging thing overall for the markets. And I think that all of this leads to just hesitance in what you're allocating. And I think about it in this way. There are probably a number of people on this call, and I've talked to CISOs who have said to me, my budget in July of 2023 was expected to be X. And then when we actually got to the budget cycle, September, October, November, it was 15% less than that. And then when I got to February and March, I was asked to take another 2% off. And it just kept trending down and down and down. I'm hoping that we don't see that this year, at least hoping that there's stability of here's my expectation in July and August. Okay, that looks like it's coming to fruition in October, November, at least for the most part. And that is the budget that carries us through 2025. Because what we saw in the 2023, 2024 cycle was constant slashing, a little bit here, a little bit here, a little bit here, a little bit here. And then at the end of it, it's, oh my gosh, this is not even remotely what I had anticipated July 2023. So we'll see. Time will tell on that. But I think interest rates coming down, I think more stability in the markets in general, getting past the election, inflation numbers cooling, all of these things are all good news for budgets, and they're good news for top lines and bottom lines for organizations.
Great. And then we have a few methodology related questions that I'll try to get to later in the session as I do want to address them, but I want to keep moving through some of the data first. Um, so let's shift into talking about spending priorities and patterns. We've got some really helpful information, at least we hope it's helpful, but stuff that we find very interesting on what some of the core factors leading to significant budget increases are. You'll see the circle size correlates with the extent of the budget growth that came from that. And then the percentage numbers under the reason is the percentage of orgs who attributed that issue as one of their primary reasons for budget growth during the year. Steve, can you kind of unpack how CISOs can use these types of business disruptions or business changes as ways to fuel budget conversations, whether it's with the CFO, whether it's with the board?
Yeah, some of it happens organically, and I think I'll probably answer some of the questions in the chat with this when we talk about valuation and timing and things like that. We have clients out there who are looking for a new CISO because they're in a new iteration of growth. We're working with a West Coast data technology company right now. That's a startup that just got a really nice round of funding, and they're expecting the company to triple in size and complexity over the next 18 months. Well, to do that, you probably need somebody who is thinking about a mature program rather than just the security engineering operational blocking and tackling. This needs to be articulated to the board. This needs to be articulated to the investors who want to protect that investment. And I think that CEOs and co-founders are thinking about this in terms of, well, what do I need to do to satisfy customer requirements to use security as a business differentiator in order to continue to enable that growth? So that's bucket number one. I think bucket number two is a post-breach situation. I'm working with a private equity-backed company today that they had a breach at the end of 2023. They've gone through with the breach responders. They've gone through the mitigation plan. They're working through that plan now. But the reality is that the breach responders are coming up with "thou shall not" in all of these lists. They don't have a mature security leader who's a subject matter expert to say, these are guidelines that we can do if we have these controls in place. And so rather than thinking about security in terms of draconian process, they think about it in terms of business enablement. And I think that, yes, you can do these things provided you have these controls and metrics in place, provided that you're looking at this data, provided that this matches the risk appetite. When we talk about timing and we talk about valuation, if an organization was expecting to transact in the first half of 2024 and they get popped with a major ransomware event in 2023, that changes what your books look like. That changes what your perception in the market looks like, both from an investor standpoint, but also from a customer standpoint. And so going out and leading the customer trust initiatives following that, bring back the value, bring back a more stabilized version of the company that then they can go out and actually achieve what they need to achieve from a valuation and transactional perspective. So that's what I'm talking about when I refer to that topic.
Yeah, and I want to unpack this data a little bit more. In past years, we would see pretty large figures coming out of things like incident slash breach, leading to like 50% plus budget increases. And a lot of orgs facing that kind of situation. We'd see a lot of orgs dealing with large company repositionings. What we're seeing now is more incremental company growth, incremental digital transformation. We're seeing security being embedded into the normal business processes and that driving budget growth, as opposed to everyone being reactionary to breaches because orgs are just used to seeing breaches now. They know it's going to happen. Steve, can you talk a little bit about operating in this environment where in many ways being able to pull to the like, we're going to reduce risk, we're going to eliminate some of this fear of a breach is just not as powerful as it was a few years ago where breaches were not as common and not as publicized. And now there's a new huge breach every other day and boards are kind of getting fatigued as risk management, or I should say risk reduction as a primary driver for security initiatives.
Yeah, there may be boards out there and board members out there who are saying, well, if they're sort of resigned to the fact that if there's a good chance that we're going to get popped with something, then why would I spend 100% of a budget ask if we could spend 70% of it? Does it really change? And this is where I think the community needs to talk about threat environments, complexity, how data and AI is really data management and AI is really transforming what we do with confidential data and the crown jewels of an organization. think about that. Yes, no company is ever going to be 100% safe because it's completely unrealistic. But let's talk about risk management. Let's talk about risk appetite. Let's talk about identity. Let's talk about what that means from an AI perspective, because I think boards are now starting to ask questions about AI. There are security implications for that, as we all know. So taking the macro trends and plugging into with your board members and senior leaders, what do they care about and how is it impacting how they think about the business, and incorporating a security lens around it. I think that just shows that you understand what's happening at a macro level. You can take market trends and marry them back to security and talk about how that may be helpful to your program, how that may be detrimental to your program, how that may be helpful in protecting the crown jewels, and how maybe there are more risks now because of some of these technologies that are available and off the shelf. And I think that just overall, we're not seeing a lack of malicious actors out in the market. We're seeing more and more activity, more and more threats getting more and more sophisticated. Therefore, the programs have to be able to parry these to the right way to manage the risk profile for the organization. And I think that telling that whole story and thinking about it in terms of business valuation, reputation, top line growth, margin growth, all of that is the right way to harness this information and talk about it in terms that your leadership and your board can understand.
Yeah, and something we're going to talk more about as we get into our State of the CISO reporting later this year or early next is we are seeing CISOs becoming kind of the owners of more and more elements of digital risk, and in some cases, just outright owning digital risk for the business because there aren't necessarily better folks in the business to do so. And CISOs are the ones who are most plugged in. And as that happens, the opportunity to tie security initiatives to business value just escalates. I want to talk a little bit now in depth about staff. We are seeing significant challenges around staffing across the industry. The continued conversation around there being a skills gap and there being a shortage of cyber professionals is there in the industry. Questions of burnout and trouble with retention in terms of keeping folks engaged remains a huge challenge. And at the same time, we are seeing not a lot of movement across orgs, very flat and even declining budgets, and generally speaking, smaller increases in terms of budget spending around staff. Steve, can you unpack a little bit about how to navigate this environment?
There's a few things I want to talk about here. One is I can't think of a time over the last 10 years where there have been more qualified CISOs sitting on the sidelines waiting for either the perfect thing or recharging after a really intense post-breach scenario or a sprint that they just say, you know what, I made money now and I just need to take a breather for a little bit and maybe I'll let the macro conditions stabilize a little bit, or unless the perfect thing drops in my lap, I'm just going to take some time off. That's happening considerably now. At the same time, there are more and more individuals who, when they leave an organization, they're not being backfilled. And so that's putting immense pressure on the team that's already there. And what we see from these numbers is that even though those people are picking up the slack, they're probably not necessarily getting compensated for picking that up, which means that there's really going to be a massive attrition issue that's happening probably in 2025 into 2026 as people say, you know, I've been really pulling double duty here for a long time. There's an open rec that there doesn't seem to be any movement. If there is activity, we're not actually making a hire. Sometimes the rec stays open for 3 months, 6 months, 12 months. The rest of the team is having to make do with what they have. And the compensation, we're not seeing those 15, 20, 30% increases that we had seen previously when it was, no, we don't want you to go. Here's a counter offer. You know, give me the CEO a list of 10 or 12 things that you want changed, and we'll deliver on 10 of them. That's not really happening in this market. And so what we're seeing is that majority of CISOs had flat to moderate growth in staff, and I think that that's from a person and overall compensation benchmark where it's somebody may leave the organization, your head of SecOps may leave. You know what? The person that was underneath them, maybe they're not the right person forever, but for 6 months, for 12 months, for 15 months, maybe we make it work and do the best that we can. We've seen a lot of that out there.
Agreed. And we see this playing out a lot around the overarching size of staff over the past 2 years. We are seeing the number of folks getting an increase and the number of headcount shrinking and decreases going up. But Steve, we don't want to be alarmist about this. This isn't a situation where like security teams are going in and being asked to slash. I think we'd more accurately characterize it as a situation where security teams are being asked to look for creative solutions. Would you agree with that? And can you elaborate?
To some extent, but I also think that when thinking about the priorities of the business and what's changing, there are roles today that are more senior than they were 3 or 4 years ago, and consequently they're going to be more expensive. I go back to the identity and access management piece. I go back to threat and vulnerability management. The blocking and tackling is becoming more complex as the malicious actors means of getting into a network become more complex. And so, what does that mean from a skills perspective, and how do you go through this skills gap? I think you're right. We don't want to be alarmists and say, if I don't get a 40% increase, then we have X, Y, and Z. And I think that money is often the easiest way out. It's like, well, yeah, I have more money, so I can go do more things. But how do you think creatively about leveraging the people that you have and the technologies that you have to do more with less in some respect? I think that when I talk to CISOs, they say, I have all the tools I need, but I don't have the people to properly manage those tools. Maybe there's something out of a consulting budget that you could put in some automated tools via consultant that somebody can monitor it part-time and not full-time. Just thinking about these ways that you can actually then go and say, hey, our ROI on this project spend was XYZ. Isn't that great? I'd like to do that here, but to do that, I need an initial investment to position me to be able to do that. Thinking about that in terms of ROI, think about leveraging AI. Again, the key words that executives, executives will pay attention to in this environment.
Yeah, and as we think about, all of these conversations, whether it's staff, whether it's budget resources, come down to making risk decisions about the business's posture and appetite for potential losses. It raises a question in the chat. Do we see a change in the operating environment where executives and C-level folks are being held legally liable due to security breaches or neglect? As we think about these budget conversations, how do we tie that into these liability conversations we're having?
Well, I think that we saw that the Justice Department brought charges against SolarWinds, and in particular their CISO, and named, and most of those charges were dismissed. But I think that just crossing that line of the SEC and other regulatory bodies are not going to be afraid to hold somebody liable. Now, I think there may be a little bit of hesitance because those cases were dismissed, and we're talking about very amorphous and complicated things here. But that precedent has been set. Those charges were filed, and even though they were dismissed, whoever it is that's next is not going to be the first time charges are filed. And so I think that it does bring some complexity around liability concerns. Most of the CISOs that we talk to when we get momentum on a search, when we get to a finalist stage, or we're in negotiation, or we're thinking about these things earlier rather than later, hopefully. But our candidates say to us, look, here's what I have today, or here's what I aspire to have in the next role, whether that's being named on the D&O insurance policy, whether that's an indemnification clause in an offer letter, whatever that may look like. And I think companies are getting more accustomed to fielding these questions from information security leaders, whereas 3 years ago, they really weren't. It was, well, we just hired a general manager and they didn't have these concerns, or we just hired a head of product and they didn't have these concerns. Well, I think we need to be thinking about security similar to a CFO when we talk about risk and liability protection.
Yeah, and something that might be worth watching for folks in the line, and some of our faculty who really focus on the compliance space can speak pretty authoritatively about this. In Europe, the NIS2 regulation was recently announced, and they're putting that into practice. And there are some rules in that almost escalate what the SEC has in its new rules in terms of quarterly reporting to boards about the company's cyber posture, educating the board on some baseline cyber competence so the board can make informed governance decisions, and possibly holding management team members liable for breaches to the point of even restricting their ability to take on a management role in their next job as kind of a way of punishment and enforcement. We've seen a pattern of more aggressive regulation in the EU eventually being brought over to the US at the state level and potentially even federal level. It's going to be worth watching in the coming year or two how those rules actually get enforced, what becomes potential practice, and seeing how it may move over to the US. Steve, related to all of this, we have a question on how you're seeing orgs look at insurance for CISOs.
Typically, the DNO will cover the head of information security, provided that they're acting at the direction of the board. And I think that There are some people in the market who really aim for indemnification for additional protection. I think that there is something to be said about what probably said how are corporations looking at insurance coverage for CISOs. The corporations themselves and the general counsel's office is there to protect the business and not you as an individual practitioner. So I know that there are information security leaders out there who have their own coverage as well. You could have coverage that is an umbrella policy that will cover you beyond what the organization is covering you. Um, I don't know how commonplace that is yet, but I have heard of some of it before. It's similar to the general counsel's office is there to protect the business from legal and help them navigate through some of these issues. They're not necessarily there to protect you as an individual. In fact, they're not there to protect you as an individual. So just understanding the mechanisms of the business and how that may impact your personal reputation, your professional reputation, and anything that may happen in the event of an incident. It's really an important topic to talk about, and we don't really have clear answers on this because it's all very fluid, and I'm not an attorney. But what I see out there is that people think about and navigate this in a variety of different ways through personal protection and personal liability protection.
And we have some questions on, you know, the balance of cybersecurity role availability versus skill set in the market and some other staff related questions. I will say we don't have that data right now. We are in the very early stages of our staff survey. So this budget data is CISOs reporting on their budget and the current state of their staffing within their budget. Our data around the makeup of teams and who are in different roles, what kind of skills are needed for those roles, et cetera, is a separate survey that we are working on right now.
We'll have
There's
data on that, but
we will,
I think I could speak to
but
that a little bit
that's
because
where I was going to go next is Steve.
yeah,
Yeah.
I talk to a lot of CISOs who they want to go to search with a role that's been open for 3 months or 6 months or longer. And they just get a lot of pushback. Well, have you exhausted your network? Yes, we have. We'll do it a little bit longer and give it another month or two. That lasts for a finite amount of time, and then things are going to start to be missed, and deadlines and projects are going to be moved out because of that. So there has to be some sort of catalyst because in this environment, even though hiring managers are ready to go, they're ready to sign contracts with people like us. There's been hesitance over the last 6 to 12 months, particularly the last 6 to 8 months. I think that things have finally started to loosen up. We started to see that in May. May was better than previous months. June was better than May. July was better than June. And so all of this, I think that we're getting to a point where the dams the dams of not hiring are starting to break. And then as you do that, you'll see more attrition as organizations as more and more roles open up, and there'll just be more movement, generally speaking, which gets us to a healthier market than what we have been. And I think that even before that, we were in an unhealthy market that was the opposite way, where you had too much movement and it was just overly hot, and people were interviewing for 5, 6, 7 things at a time, and that's not sustainable either. So finding some level of normalcy, finding some level of consistency across these roles is really needed. And I think and I hope that we see that as we head into 2025.
Yeah. Um, and as this all adds up, what we are seeing overall is year-over-year growth of staff becoming much more incremental and down to 12%. Steve, if you're advising somebody who is working with a team that is way smaller than it needs to be and they need to make a business case to the org to expand, what's your advice?
My advice would be to start a search sooner rather than later because you have a lot of people who are open to something else and they're not finding the right next role because there's just not as many opportunities as there were previously. So if you can get ahead of that, I mean, if you're a first mover in there, it gives you an automatic advantage because if you're going out and you're a follower and your competitive set is looking for similar roles than you are and they have a month head start, then the candidates who are right for picking are going to be going there first. So that's how I would think about that. I mean, I think that also aligning your security organization with where the business is going is really important. So, okay, look, we have the program that we have for where the company has been during this downturn cycle and a little bit less hot of a market. Now, where are we going? What does our organic growth trajectory look like? What does our M&A look like? Are we going to be inheriting people? Should we be thinking about that and incorporating that into our staffing plan? All of this comes into effect of what's my hiring plan? Who do I plan to go out in the market? Who can I grow internally? Who's in the right role? Who's not in the right role? Who's maybe leveraging a different part of the organization? We also see that for organizations and leaders who are they're craving some security engineering expertise, maybe there's somebody in IT that you could scale up on the security side. Poke around and see what you have internally before going out and asking to do an external search as well. That's another way that you may be doing things. Now, to some extent, yeah, you're paying Peter to rob Paul, as the saying goes. But I think that you're thinking about the budget and the overall spend. That there are people internally who may be resourced in a different way that might be really helpful to solve some needs.
And as we shift away from staff, let's talk about some of this overarching spend prioritization. What we are seeing, so these charts are percent of security budget as a percent of IT budget and security budget as a percentage of company revenue. We're seeing pretty consistently across the board, proportionately, security becomes a larger priority for businesses over these past few years. We're pretty excited about this data. It backs up what we're seeing in the market as orgs become more aware of digital risk. They digitize more processes. They need more from their security teams. So even though we are only seeing incremental budget growth for security, that incremental budget growth is happening at a time when businesses are facing pretty significant financial pressure and security is still growing. Steve, anything you want to elaborate on there?
These lines are becoming more and more converged, and they're getting blurred quite a bit between tech and IT, between tech and security, and IT and security. So I think that as we see that the IT stack is becoming more commoditized and less complicated, the security stack is actually becoming more complicated, and the vendor universe in the security realm, even with a lot of that consolidation, is still really difficult to understand and very expensive, as we talked about earlier. So all of this comes into play, and none of this is really surprising when we see it in the data. I think it matches what we've seen in the market over the last 3 or 4 years.
Yeah, this is a natural time to ask a question that came in. What is an approach to take budget-wise if you're still behind the curve with the fundamentals in security spend, e.g., no SIEM, logging SOC, so there still needs to be a spike in investment, but business conditions are just not favorable to allow it?
I think it's talking to your executives about what's happening in your direct space with your direct competitive set. What do those programs look like? What do those risks look like? And saying we are behind the curve because of these reasons. And having a good understanding of what the organizational risk posture is too. It's if we're misaligned, then we either need to do something about it or make a conscious choice that we're changing our risk posture. But I think that leaders have a tendency to believe what they believe in the context of what they know already. And so talking about the competitive set, talking about the threat environment that some of your competitors are dealing with and what they're doing to parry some of that. This is where ISACs could be really helpful. This is where industry conferences or Slack channels can be really helpful. Just to network with your peer group to understand what are you seeing, what are you doing, how are you solving? Because if you are way behind, some organizations, they just don't get it, right? And we see that a lot in family-owned organizations, privately held organizations. Oh, we're a B2B company. Nobody even knows who we are, so why should we be worried about it? The reality is that everybody has a target on their head. I just talked to a friend the other day. They own a family run CFO outsourced CFO practice. And they have accounting software and things like that. They got popped for a ransomware event. Never in their wildest dreams did they think that they would be a target, but they were because they had a soft perimeter. So no organization is immune. And while the scare tactics is not the route that you want to take, I think it's the business tactics of here's what's happening, and I think that our risk posture is misaligned with what the reality is.
Agreed. And then spend just a minute here. What we see is this security spend as a percent of the IT spend. It skews significantly based on company size, in large part because smaller orgs are generally going to be leaner from an IT perspective, getting by with less tech, and they need a lot of security still to manage that digital risk. Whereas as you get larger, you kind of reach a baseline point where you've spent enough on security, and security is the ability to impact the business over a wide part of the org and add value is high, but you still need a ton of tech. Steve, anything you want to add there?
Yeah, I think that's right. I think that there's a baseline level of security that any scaling organization needs, and we see that evident here. It just this is highly dependent on what the organization at large looks like.
All right. I want to take a moment to circle back to staff at like a big picture level, walk you through this slide real quick. It is on the right, we see the average security headcount relative to company size. That's the size of the security team relative to that revenue. And then the gray is security headcount per employee, blue is security headcount per IT. I don't have a lot to say in terms of commentary on this slide. Steve, I'll ask you for your commentary in a moment. We wanted to put this data in front of you to give you a tool to really think about, okay, if I'm in this revenue bracket, this is roughly how much security headcount I need relative to our IT department. This is roughly how much security count we need relative to our employee headcount. And broad strokes, this is the average team size. That way, if you find yourself needing to really negotiate for staff, you've got some numbers to work with. Steve, anything you want to elaborate on here?
I would also take this data, which is interesting in and of itself in a vacuum, but I would also think about what type of security leader are you? So what type of security leader am I? Where do I fit into this trajectory? Am I the person that comes in when the team is 5, needs to scale to 10 to 12? Am I the person that's leading the team from 20 to 50? Am I the person that takes the company through some acquisitions and organic growth and gets them from 100 million to 500 million? Or am I the person that takes it from 40 million to 80 million? Those can definitely be different types of skill sets and different types of personas, so to speak. So thinking about whatever it is that you want to do next, where do you fit in this context? Because if this is what we're seeing out there in terms of size of an organization, complexity of an organization related to scale, thinking about that in terms of what you want to do next and where you ultimately want to take your career, this could be really helpful.
Great. And then I want to take a moment and talk about breakdown of annual security budget. What we've seen is the staff and compensation number at 37% is pretty comparable across the past 3 years. It was 38% the year before, 39% the year before that. And really, most of these figures have stayed the same. What has shifted is 3 or 4 years ago, on-prem software and off-prem software were close to one another. And every year we see them move another couple percentage points farther apart to the point now where off-prem is becoming a fairly substantial part of the budget and on-prem is more of an afterthought. Steve, anything to add?
Well, I guess the question that comes following that is consequently, does this get more expensive, right? And what does this do to the budget as a whole? None of what you said is surprising because that's just the next generation of IT management, data management, data collection. But thinking about the budgetary implications of that as you go and you try to get more budget for your program to match the needs of the business and where it's going, you can't fight gravity, right? Off-prem and cloud managed software is the way of the future, and we're there. So thinking about that in the context of your budgetary ask could be helpful.
Great. And then we have a breakdown a little bit based on overall org type. Steve, I know this tends to be a topic that's high on your list of things you enjoy talking about, so I'm just going to let you take it. Anything you want to talk about here?
Yeah, I mean, look, every organization thinks about this differently. Every organization has different priorities. I think that when we consider there are going to be buckets of aggregates where it's harder to get budget, and there are going to be ones where just because of the compliance requirements, just because of the regulated nature of an organization, it's going to be a little easier. But I think I go back to the what's the catalyst for the increase in budget, and what's the catalyst for spending on staff and spending on compensation, thinking about all of that. But bottom line, I mean, we look at this and the trends are mostly similar, right? But I think that it's just understanding also, we talk about career development, and I like to marry it back to that too, because at the end of the day, I'm a career advisor and I'm matching people with roles and giving career advice to people who aren't candidates or clients just to help the community. What is the environment that you're going into, and why does your skill set make it the right fit? And I think thinking about organizations that are venture backed, private equity backed versus public, what segment, what sector, what's the catalyst for the team build? What's the catalyst for the change? All of this is really just holistically important as you think about where you want to take your career, not only for the next role, but how that's a springboard for where you ultimately want to bring your career over the next 5 years, 7 years.
Great. So real quick, market observations and takeaways. We do see, understandably, a very tight link between satisfaction with budget and budget increases. That kind of goes without saying. But overarching trends we are seeing, Steve, want to run with this one?
Yeah,
Kind
I
of.
think as we think about 2025, what do we expect into this budget cycle? And I think maybe as we get towards Labor Day, people are getting more of an understanding of where this is going. But I think that the days, unless you're going through a massive transformation, the days of the 40% increases to build the program from scratch are sort of behind us. Whether it's a rebuild or a mature or a post-breach response or a response to an industry event or things like this, what you can do from a macro level and what you do holistically of what's happening in the market and what does it mean for your organization and what's security's piece of that. I think it's not talking about security in a vacuum. I think it's talking about security in the context of broader business risk profile, security in the context of what's happening in the market conditions, security in the context of where your business is going. And so listening to the quarterly business reviews, listening to the what your CFO and your CEO are saying in quarterly updates or earnings calls and things like this if you're at a publicly traded company, being engaged in these discussions. And it doesn't even have to be formal. It could be sitting down with a CFO or a general manager or head of product and say, what are you concerned about from a budgetary perspective for 2025? Or what are your three biggest priorities? Because chances are their priorities have some impact on the security budget. And that's how you can market, hey, look, I know that we weren't planning on big budgets this year, but with this major product initiative, I look at the product roadmap and I think about what we're doing from a DevSecOps standpoint. And the implications are that we may fall short in these three areas. So we should think about that and we should make a conscious effort to either remedy it or become comfortable with the risk of that all.
Great. Thanks so much, Steve. I want to give us a few minutes to lightning round through some of these questions because we've got a lot in the chat. Touching a little more on something you mentioned about security timing might hinder exits. You kind of addressed that earlier, correct?
Yep, yep,
So
yep.
we'll keep moving there. So we did not collect information related to how budgets align to security frameworks. We'll look into that for next year.
Well, I guess so. Thank you for the question, Tracy. It's important. I actually just wrapped up through IANS. What we did is we looked at a large scale security organization of a couple hundred people, and we mapped that to the NICE NIST framework. The budget for that project, I think, came out of the projects and consulting budget. But thinking about the remedies that come out of that and the actions that come out of that, yeah, there's a cost to do any sort of remediation. So thinking about what bucket you could maybe pull from. We've even had organizations where a CISO says, I desperately need a head of security operations. How can we get around this if I have a hiring freeze or a recruiting freeze? We say, put it in a consulting bucket. We come in, we do an organizational assessment. Part of the findings is your company's at risk because you're missing this key position. There are different ways to think about this. So don't just think about it as the way that we've always been doing things, but think creatively to get what you need.
Great. In terms of, so I'm just going to read this out loud. Am I correct to assume IT spend is mostly on the enterprise side of the house and does not include the engineering/production side? If so, will metrics or percent of budget for tech spend be forthcoming in future IANS research? What I will say on this one is we have folks who take the survey kind of self-identify what they consider IT spend versus security spend. So there will probably be some folks who do consider engineering production part of that and some folks who do not. Steve, I don't know if you want to elaborate on that at all.
No, that's fine. That works. Yeah. I want to address Amy's question. She says, do you see any convergence with security, fraud, privacy, et cetera? Or is there still clear delineation? We definitely see that at most organizations, people are wearing multiple hats. There's rarely, unless you're in a really highly specialized function, an incident responder may be focusing on incident response. And if they're at a bank, that's pretty much all that they do. But I think that the most organizations, they have their analysts and even their managers to some extent. They're wearing multiple hats. And you can find that data in our staff report from 2023, where we have a nice matrix where it's if your major is this area, then you probably have minors in these three areas. So that may be a good place to look to get more information on that particular topic.
Yeah, and then we have a few questions about specific industry crosstabs for data sets. What I would say is like Steve and I don't have that data handy. That's deeper in our reporting, but the analyst who works on all of this with us is always happy to perform some custom data pools for folks from our files. If you're an IANS client, feel free to go to your account manager and say, hey, I'm looking at your budget data. I'd like this information, and they will put you through the right channels and we'll get you that. If you are not a client, talk to the account executive working with you and we will see what we can do to help you. We're usually very open to help with those kinds of requests.
Yeah, I'd also say for IANS clients, if you want to dive into any of this in particular, we could do an Ask an Expert as well. They could be email responses, they could be a phone call that's a half an hour to an hour, whatever may work. So I do that quite a bit. We talk about organizational design. How do I think about my organization in the future versus where it is now? Can we dive into some of these metrics? Here's what I'm thinking about my next state. How does that compare to my peers? Those are topics that I talk to clients about regularly.
Yeah, and then we have a question about deputy CISOs. You'll see that covered when we get to our org model research later this year. It's just not within our budget research. And then the question came up earlier about manufacturing cut on budget change and how manufacturing budget changes are happening. And that didn't make it onto the slide, but it is in our reporting. So I want to take a moment. As I'm sharing my screen, I can't pull up the exact figures now, but Steve, correct me if I'm wrong. We saw a bit of a recovery in manufacturing budgets this year.
Yeah, and I think that the part of that is just the complexity of OT and IoT and the supply chain risks that come with an organization. We just started an industrial CISO search, and they had somebody in the role for a good while, and they didn't for a couple of years. And now the complexity of feet on the street, different plants, different sites, different supply chain challenges all lead to what's becoming an increasingly complex threat vector landscape.
Yeah, great. Thanks so much, Steve. Folks on the line, thank you so much for all these questions. Apologies that we've run out of time and can't quite get to all of them, but I think we hit most of them as much as we can. I'm going to pass things back over to Nick.
Great. Thanks, everybody.